Hi and Assalamualaikum. We are from FIN420 Group 4, Class JPA 27218. Our group consists of 5 members, myself Manisha, NURHAZIQAH, DAMIA, SYUHADA and HUMAIRA. Today we'll be presenting on VITROX Corporation BERHAD and INARI BERHAD. I will begin with the introduction. VITROX Corporation BERHAD is a Malaysian public technology company based in Penang, founded in 2000. The company specializes in machine vision system for the semiconductor and electronic industry. VITROX has expanded internationally and received various recognitions, including inclusion in the FTSE for Good Bursa Malaysia Index and Malaysia Best Managed Company Award. In 2022, the company recorded a net profit of 33 million ringgit Malaysia. Meanwhile, INARI AMETRON BERHAD is a Malaysian investment holding company involved in the outsources semiconductor assembly and test OSAT and electronic manufacturing service EMS industry. It operated large-scale production facilities across Malaysia, Philippines, and China. The company aims to be the strategic partner to nice customer by delivering quality product, efficient service, and sustainable value. INARI AMETRON BERHAD is certified with a very international accreditation and has received multiple industry awards for excellence and sustainability.
As for liquidity ratio, based on the table and graph above, INARI AMETRON BERHAD has less liquidity in 2021 than 2020, 2022, 2023, and 2024. In 2021, the current ratio was 3.1 times and the quick ratio was 2.47 times. This shows that the company has less ability to pay its short-term liabilities compared to years 2020, 2022, 2023, and 2024. The company has the most liquidity in 2024, which is 7.88 times. That indicates that the company was more sufficient to cover its current liabilities in 2024 compared to the other years. Next, based on the table and graph above, VITROX Corporation BERHAD has less liquidity in 2021 than years 2019, 2020, 2022, 2023, and 2024. In 2021, the current ratio was 3.38 times and quick ratio was 2.38 times. This shows that the company has less ability to pay its short-term obligation compared to years 2019, 2020, 2022, 2023, and 2024. In 2023, the current and quick ratio showed the liquidity at 6.05 and 3.76 times respectively. This indicates that the company was the most sufficient to cover its current liabilities compared to years 2020, 2021, and 2022. In 2024, INARI AMETRON BERHAD has a higher current ratio, which is 5.56 times, than VITROX Corporation BERHAD, which is 7.88 times. The quick ratio also shows the same rate that INARI AMETRON BERHAD is higher, which is 6.28 times than VITROX Corporation BERHAD, which only reached 3.90 times. Thus, INARI AMETRON BERHAD has a higher ability to convert assets into cash quicker and cheaper than VITROX Corporation BERHAD. If the liquidity ratio is too low, these companies might be not able to pay off their debts and obligations.
So now, let's look at the activity ratio for VITROX Corporation and INARI AMETRON to see how well they run their operations. First, VITROX Corporation BERHAD. Their story is different. The inventory turnover is okay between 1 and 1.5 times, but their collection time got worse recently. It went down to about 121 days in 2023, but in 2024, it jumped to 156 days, which is over 5 months. Also, their asset turnover keeps dropping. In 2020, it was 0.72, but by 2024, it was only 0.35. So, they are using their asset less effectively over time. Now, INARI AMETRON BERHAD. Their numbers show some problems. Their inventory and asset turnover are low, which is around 0.8 to 0.9 times. This means their stock sells slowly and their assets don't create much sales. Also, it took them a very long time to collect money from customer, like almost 8 months in 2023. That's a serious cash flow problem. But in a newer report, they improved a lot, like collecting in about 16 days. So maybe they fixed the issue recently. Now, let's compare them side by side. Both have the same asset turnover recently, which is about 0.5 times. That means both have a lot of equipment and property but are not making enough sales from them. In collection time, INARI AMETRON BERHAD looks better in the latest data, which is 16 days compared to VITROX Corporation BERHAD 115 days, but yearly INARI AMETRON BERHAD was much slower, so INARI may have improved recently while VITROX Corporation BERHAD collections slowed down. In short, INARI had big cash collection problems before but may be improving. VITROX Corporation BERHAD was doing better before, but now its collections are slowing and its assets are not producing enough sales. Both need to manage their assets and collections better to be more efficient.
Based on the table above, the analysis illustrates that VITROX Corporation BERHAD debt ratio in the year 2023 is 0.60, which is the highest ratio than years before. In 2024, the company showed the lowest debt ratio that is 0.16, while in the year 2020, 2021, and 2022, debt ratio are 0.27, 0.25 and 0.23. Since the ratio are lower than 1, the company has more assets than liabilities. Next, in 2022, it showed the highest debt to equity ratio of 0.1, which still indicate the company with very low risk to shareholder, while the debt to equity in 2024 is the lowest at 0.05 compared to the years 2020, 2021, 2022, and 2023, which are 0.07, 0.05, 0.10, and 0.07. Next, the table above illustrates that INARI AMETRON BERHAD debt ratio in the year 2021 is 0.24%, which is the highest ratio than years before. In 2024, the company showed the lowest debt ratio that is 0.11%, while in the year 2020, 2022, and 2023, debt ratio are 0.17%, 0.30% and 0.5%. Next, in 2021, it showed the highest debt equity ratio, indicate the company with higher risk to shareholder, while debt to equity ratio in 2023 is the lowest, which is 0.1 compared to the years before. This showed that INARI AMETRON BERHAD has better leverage compared to VITROX Corporation BERHAD in the year 2022. INARI debt ratio is 0.12, which is higher than VITROX 0.05, but still considered low because it does not exceed 1. This indicates that INARI has more assets than liabilities and is not highly dependent on the debt. For the debt to equity ratio, VITROX record a higher ratio of 0.16 compared to INARI 0.11. This means VITROX relies more
on debt financing relative to equity, while INARI used debt more conservatively. Overall, INARI AMETRON BERHAD demonstrate stronger and more stable leverage compared to VITROX Corporation BERHAD in 2022.
The table and graph above illustrate that the operating profit margin ratio for INARI AMETRON BERHAD in 2020 is 16.42%, which is the lowest out of the other 4 years. In 2022, the operating profit margin ratio is higher, 27.99%, than 2024 19.44%. This indicates that in the year 2024, INARI AMETRON BERHAD is less efficient at creating productivity than other years. In other words, the higher the operating profit margin, the better. In addition, the company in 2020 has less ability at generating a net income as it gained the lowest net profit margin ratio, which is 0.15%. However, in the year 2021, the company's net profit margin ratio elevated to 0.23% and descended until it became 0.20% in 2024. Thus, the company is inconsistent at gaining operating profit margin and at gaining a net profit margin. Next, based on the table and graph above, the analysis illustrates that VITROX Corporation BERHAD operating profit margin ratio in 2024 is 19.44%, which is the lowest than the other 4 years. In 2023, the operating profit margin ratio is lowest, 25.34%, than 2022, 27.9%. This indicates that in the year 2022, VITROX Corporation BERHAD is more efficient at creating productivity than other years. In other words, the higher the operating profit margin, the better. In addition, the company in 2024 has less ability at generating a net income as it gained the lowest net profit margin ratio, which is 0.16%. However, in the year 2021, the company's net profit margin ratio elevated to 0.25% but started to fall down in 2022 at 0.27% and further to 0.22% in 2023. Thus, the company is inconsistent at gaining both operating profit margin and net profit margin. Based on the cross-sectional analysis, VITROX Corporation BERHAD has a better operating profit margin ratio, which is 19.44%, compared to INARI AMETRON BERHAD, which is 16.60% respectively. The higher the operating profit margin, describing a company as efficient in its operation and skillful at turning sales into profits. Net profit margin ratio for INARI AMETRON BERHAD has a better ratio than VITROX Corporation BERHAD, so INARI AMETRON BERHAD gained more profit in 2024. VITROX Corporation BERHAD has a lower net profit margin ratio, so the company used poor pricing strategy and ineffective cost structure. As an overview, the higher the ratio, the better the company.
In conclusion, both INARI AMETRON BERHAD and VITROX Corporation BERHAD operate in the electronic industry based on financial ratio analysis. VITROX Corporation BERHAD show better overall performance than INARI AMETRON BERHAD. especially in probability and activity ratio. This indicates that VITROX managed its asset more efficient, benefiting both the company and its shareholder. Next, recommendation. Based on the financial analysis, both VITROX Corporation Berhad and INARI AMETRON have a strong position in Malaysian technology and semiconductor industry. However, VITROX is recommended for investors seeking stable performance, high efficiency, strong profitability, and consistent cash flow, supported by its focus on automation and machine vision technologies. INARI AMETRON Berhad is more stable for investors with a high risk tolerance who are estimating about long-term growth in the semiconductor and chip packaging industry. Despite short-term earning fluctuation, ultimately the better investment choice depends on the investor's financial goals and risk appetite. Thank you.